Welcome to Level Up Real Estate Investing Podcast with Robert Hyder. This is a no-fluff podcast where we dig deep into the journey of scaling your real estate investing and wholesaling business and discuss how to break into commercial real estate investing. Hey everyone, welcome to Level Up Real Estate Investing Podcast. Very exciting day. We got Jace Graham out of Dallas, Texas. Absolute stud. Jace and I have known each other for a couple of years now, met through a mastermind. He's been in real estate investing for a few years on the wholesale side, but has been in the oil and gas industry since 2004. So a little over 15 years now. Manages a $50 million portfolio. Really exciting stuff. There's a lot of overlap as it relates to kind of the real estate investing in the oil and gas industry. So I'm really excited about this conversation. And like I mentioned, Jace is just a stud. Met him and his wife a handful of times on some trips that we've gone to. 2 kids in Dallas, right? And Anything else I missed here, Jace?
Yeah, I think you've got a good high level coming in live from a little town called Evant, Texas, in the middle of nowhere. So nice. In a little home, our little mobile office, our Airstream. So we are live and coming at you, man. So appreciate you having me on, Robert.
So when did you close out Fund 3 or when for the capital raise portion?
Fund 3 closed out at the end of December of 2019.
Oh, okay. So just a few months ago. Because
we've listening
today's the 9th of April.
Yeah, 9th of April, of 2020. So we are $3 million into the placement of fund, meaning we've found $3 million worth of assets that we really like for the fund, and we bought them on behalf of the fund.
Yeah.
I'm the general partner. I also have a setup with a servicing company. The fund does. The limited partnership has a services agreement in place with, guess what? Rising Phoenix Royalties. That's my company. Mm-hmm. And that's where we do all that. We've got the people on the acquisition side and all this stuff, which let me just make a side note. I love coming and hanging out with real estate guys because all the real estate guys are 10 years ahead of the oil and gas guys on marketing. Okay. So if you can imagine ringless voicemail in real estate, everybody's like, everybody's doing ringless voicemail. No one's doing that shit over in oil and gas. No one. So I'm just taking it up. I'm like, oh my God, I can't wait to do this. Text blast? Oh my God, no one's ever done a text blast. Holy shit. So we're doing that over in the oil and gas side, and it's bananas. Okay. So we're like the only one doing this kind of stuff. Wow. I'm talking to my guys in the oil and gas world just saying, hey, have you guys heard of Mojo? And they're like, what the hell is Mojo? I'm like, it's a triple line dollar. You need to figure that shit out, So it's awesome. So I love kind of hanging out with the real estate guys and taking that stuff and applying it into the mineral and royalty space of what we're doing because we're literally changing the game on how we're doing stuff over there. But yeah, so we're $3 million into Fund 3. We purposefully, pumped the brakes. We had to go in and renegotiate deals. Just like I think, if you're under contract on real estate deals, what's happened in the last 30 days, you need to renegotiate those deals based on work currently. Okay. And don't be bashful about it. I mean, stuff happens. Stuff happens on retail transactions all the time and deals fall out. Get over, we've got to be able to protect the business and we've got to be able to look at, okay, well, everything is now moved down 10, 15, sometimes 20% on price points in the real estate space. We had to do this in oil and gas to adjust from that $60 to $25. So we're sitting on about $7 million cash. And brother, I got dudes coming at me and right, interested in selling, and they want to sell for cash quick. Sounds very similar, right, to real estate. Okay. Yeah. I think real estate will really hit in the next 3 months. When it really starts happening today is really going to start to pick up, and people are going to be like, man, that house that they're sitting on that, they inherited from their mother and all this kind of stuff that they need the cash. They're going to sell it. So I think right now, still continue to do deals on the real estate side of the business. Don't stop that. But just be cognizant of, hey, I've got to provide exceptional value to my buyers now. And they're not buying at 80% ARV minus repairs right now. That ain't happening. They've moved down to probably 70%. So I need to move down another 10%. So it's something to kind of think about. So I'm fired up. I don't know if you can tell, but I'm fired up on, where we are on Fund 3 on the royalty side, because I got $7 million and I got motivated sellers, man, that need cash, and I can come in and I'm buying right now based off the $25 oil, not the 60. This is where we are today.
Yeah.
So it's the same thing on the state side. Hey guys, listen, you could be talking to the people that were kind of kicking the tires and all that kind of stuff inside your CRM, inside all your leads, and just like, guys, here's where I was last month. Here's where I am today. It's a matter of this is where the market is. And I can still provide an all-cash solution. I can work with you on your move out. I can work with you on a bunch of different things and make this convenient, even in this craziness that's going on, because I've got the skill set to know where the buyers are, okay? But you're going to give up some of the equity for that convenience. So,
absolutely. So if I understand this right, just for the industry, so you're giving them a lump sum payment right now for future cash flow stream. So they know they're going to have 10-year cash flow stream for this oil. And as of right now, the oil is selling at $25 a barrel. So Chevron or whoever comes in, buys it, they kick a quarter of that amount back to the mineral rights owner or whatever the percentage
Correct.
is. And
correct.
So if you can buy it based on the cash flow stream at $25 a barrel, and then in 18 months it jumps back up to $60 a barrel. Now the cash flow stream based on the present value of purchase is exponential. It's huge.
Correct.
Am I hearing that right?
Correct. And so you nailed it. And exactly what we're doing. And so we're looking at the current cash flow. It's not a flat number like a rental, right? Where it's a flat fixed number every month. There is some decline in production, and that's why we have a staff that helps really navigate through that. That's really, looking at that kind of stuff. Yeah. But just on average, if you're getting $1,000 a month, Farmer Brown out in West Texas is getting $1,000 a month. We knock on Farmer Brown's door, or right now we're not doing that because we're calling, right? Because we're not, with COVID.
Hey,
but
you're not knocking,
we ain't knocking. And actually, we've been doing virtual wholesaling and minerals and royalty since, that's the only way you do it. But we're paying maybe $60,000 for that $1,000 a month cash flow stream, which is a 5-year payout, which also is a 20% cash on cash return. Okay, so if all of a sudden, based on the $25, so that's what I tell my investors is I say, listen. They're like, what if oil goes to 12? I go, well, then that 20 is now a 10. Well, that's still, we're talking double digit here. Okay.
Yeah,
now, if 25 goes to 50, now I'm putting 40% on the board. Okay. As far as a return. So that's where my investors, they feel they like this asset class right now. They understand why it goes up and why it goes down. I would say similar to your guys in the real estate space, right? That your investors in the real estate, they can understand why their asset goes down. I can't figure out the stock market to save my life. That's why I don't have any money in the stock market. I just don't believe in it. Everybody, people listening on this podcast, you guys are freaking originators. Do you realize how many people would give their left nut to be an originator? Okay. I'm serious. Like, it is like crazy. Like, you got doctors and lawyers and all these people that want to invest. You guys are actually originating deal flow from the source.
Absolutely.
Most of you are. Okay.
Some
people are like, yeah, you're the rainmaker.
Yeah.
So what I'm starting to realize now is that the product that I'm putting out there, whether that's on the oil and gas side or it's on the real estate side, and we're raising some capital on the real estate side, and maybe we can go into that next.
Yeah.
But, is we're providing exceptional value. These are tangible assets. People can see them, touch them, right? Maybe you can't see the oil under the ground, but, it's not, a stock price that you really, you may have a good stock in Chevron, but the whole sector gets hit and your whole stock goes to crap. Mm-hmm. So these are real alternative, tangible assets that people like, especially now. Okay. So you guys are originating right? This stuff. Yeah. Yeah, you're getting deals under contract for 60% market value. Anybody you talk to right now is probably going, "You can do that? Right. Holy cow!" Yeah. And you're like, "Yeah, I can do it. You want to work with me? You want to invest with me and see what I'm talking about?" And you walk them through a deal. You give them a case study, right? And you walk them through a deal and get them comfortable, right? And that's how you get this thing going. You dig your well before you're thirsty, bro. Okay, so you're not just going to be able to think about this stuff and then just sit there and be like, I'm going to be raising capital. But I've done all kinds of crazy shit to raise capital. I've done everything from, I said, well, I'm going to start sending direct mail pieces out to everybody that I pull off lists that owns a home over $1 million. I was like, shit, those people are probably accredited. So, yeah. And I just sent a little direct mail piece. I used a company called handwritten.com with a Y, and it looked like a handwritten little postcard. okay, from me. And I just said, hey, this is Jace with Rising Phoenix. I'm interested in visiting with you. If you're at all interested in learning more about some direct investments that we're doing, please reach out, let me know. I'm happy to call. And I had a number for them to call into. And so we raised $1 million that way. Raised $1 million. I was like, I don't know if it's going to work, but you got to try, right?
Yeah.
So somebody got that. They looked at it. It looked like a handwritten from me. They called me back. They're like, did you really write this? I was like, kind of. I was like, that's some of the technology we use to get out. I'm going to be up front. But I got them to pick up the phone and call, and I had some great conversations with some guys, gave them numbers, and out the door we raised some money. So, I mean, there's ways that you can raise money, whether you know the individual or you don't know them. But again, what they really want is they need to understand what they're getting themselves into. They need to understand kind of what the overall process is, right? You need to make that kind of that promote or how you're going to be doing the deal with them very transparent, okay? And they've got to love the story. They got to love you and the story that you're telling, okay? And so I get extremely passionate when I'm talking about this stuff. In my audience, I could see it in there. I could see them getting fired up. I can see them getting fired up about working with us.
Is the story important? Is that what we're saying?
Story is important. Story is important.
I'm messing with you. No, absolutely, bro. And I feel it right now. I can feel it talking to you. It's like, holy cow, this is huge. How much money do you need? You need more?
Let's go.
Does anyone in this $10 million fund need out? They need their cash.
Yeah. Well, we're actually rolling into Fund 4 right now. My team is small and nimble. We don't have, there's only like 3 or 4 of us on the royalty side of the business. We've got 10 folks on the real estate side.
Yeah.
And so, but I'm now raising capital on Fund 4. We're using this as a selling point because the story is so freaking believable. Mm-hmm. Okay. Hey, we're deploying capital on Fund 3. You want to get in on Fund 4? Man, you are at rock bottom. Okay. To get in on these low prices, you could be telling that exact same story in real estate in 3 months. You know what I mean? Yep. Like, wow, unemployment's 30%. What? We've never seen this in our lifetime, in our parents' lifetime, and possibly in our grandparents' lifetime. So, I think there's some phenomenal opportunity for you to kind of, look at that and reach out to people that are just done with the stock market, done. And they want to invest in things that they can go out and touch and see and believe in, and right now the tangible alternative assets, that's where people want to be.
Absolutely. Stock market drops 35% in 6 weeks and people start looking elsewhere, right? And getting really excited about other things. They're done with that. Okay, we went through this already, in 2008, and it took us X number of years to bounce back, and it's just a roller coaster, It's it
really is.
1,000, 2,000 point swings in a day is enough to spook people,
Yeah, but I can't figure out why and what's driving it. And if I can't figure that out, I can't understand it. There's a lot of speculation, right? But I don't want to invest. In something that has a lot of speculation associated with it.
Yeah, you can make sense of the basic stuff, but you don't know if you're getting the right information. You don't know if everyone's just freaking out. You don't know, like the businesses that majority of the businesses that are in the stock market are so complex and there's so many layers deep, and you're like, okay, you think you're investing in Netflix and Netflix is going to go up, and I'm sure it did, but what else are they doing that's being hurt, hit that's going to be crushed, that you're not even counting on. You're assuming that Netflix is just, producing movies and sending out the video and TV platform, but they could be in some other industry that you just don't even really understand, and they're getting whacked over there. So the upside isn't there. It's just it's so complex these days. So I'm with you. Well, where do you see? So this is really exciting because I think that's a big piece that you hit on regarding the marketing sophistication of real estate investors and wholesalers, and they are constantly looking for the new strategy, the new way to get an edge, and a vast majority of other industries just aren't there yet. So being able to apply that in another industry while that other industry is kind of getting whacked here where there's upside anyway, but then also being able to get in front of folks. That's a big takeaway that could be applied to so many different sectors. So then the question is, like, what sectors, what areas are kind of are still just kind of behind the times, And I'm not asking like, hey, let's think about it and talk through that, but that's a thing that folks should be digging into as they're looking for opportunity out there, in addition to what they're already doing in their sector. There's so many unique challenges, but big opportunities that are going to come out of this kind of once you clean house, which is kind of the one thing we've been telling everybody, and one that actually we've been living by. It's like, okay, we need, 4 weeks ago or 3.5 weeks ago, when this really started to get just like on the ground, real deal, maybe it was 5 weeks ago, but it was like, all right, we need to take a step back. We need to clean house, really understand where all the expenses are, what's going on, make sure that our current deals still make sense. To your point, go back and renegotiate them, make sure that the principles you were buying on back then like work, and then the buyers are still going to look at it the same way. Okay. And then dig through and say, okay, well, what about the contracts that we have and the future deals that we're working on? And then are those buyers that we thought were there, are they still really there?
Right.
Has their lending source, has their funding source been pulled out? Has all the flock and liquidity in the market, has that affected them? So we need to touch them, because I think there are a ton, and like I mentioned before, today's the 9th of April, 2020, but I think there are a ton of wholesalers out there that aren't really up to the times, that don't really know exactly what's going on. And I bet you they've got a bunch of deals in their pipeline that they think are going to close, that their buyers are going to be able to fund and make that deal work. And they just absolutely aren't. They just don't know it yet.
Right.
Whether the buyer doesn't know yet or the wholesaler doesn't know yet, one way or another, those people I think are going to get hit pretty hard here in the very near future. So we've been digging super deep into that. And then step 3 is to go out there and make that big marketing push towards the buyers, so that we can, 1, ensure that the folks that we think are buying are still there. And then 2, go out and find the new folks that are buying. We're pulling tax record data and local data like by the week to see what deals are actually closing still and at what price are they closing at, so we can see who's buying, and then really understand kind of what the new norm is in relation to purchase price. If they were buying 3-bed, 1-bath, 1,200 square foot houses in XYZ area for 100, 8 weeks ago, what are they paying now? Are they paying 80? They're paying 85, 70? I don't know. So, and it's day by day, right? So we're trying to pull that data in real time, hopefully find some new buyers. And we actually have. We've had some pretty good success finding new folks out there, like literally in the last 3 or 4 weeks when we thought no one was buying and a lot of our deals were falling through because buyers didn't have funding. We found a couple of new folks and they've been selling the hell out of stuff to them. And I think that'll be the difference. That pivot's going to be the difference between folks that really make it out of this and folks that just get whacked and, just kind of either throwing the keys, throwing the towel and go look for a different industry, or they're in such a deep hole that they burn through all of their reserves, just holding on to see what's going to happen. We're trying to press forward and figure out where the opportunity is to stay profitable in our main operating business, so that once things loosen up a little bit in the next handful of months, we can really see where the big opportunities are, and stuff like this, talking to you. I mean, it sounds like the oil and gas industry is a big opportunity. Those folks are trading long-term, making long-term decisions based on a current situation. And whenever that's the case in a depressed market, there's huge opportunities, right?
Huge.
And that's that. We've been doing the same thing on one of my big angles is buying notes, whether it be commercial or residential backed notes, or real estate backed on commercial or residential real estate. But, talking to the banks, seeing what they think, seeing where they're getting hit. Are they having to, if a borrower comes and says that they need to reduce their rate, or they need to go IO, or they need debt forgiveness for 3 months, 6 months, at what point is the Fed and the State Division of Commerce going to say, hey, now you have to downgrade that asset? Because once that occurs, now they got to hold more capital aside for it and everything changes. So, that's a big angle, not only with banks, but private lenders, hard money guys. I'm sure they're in a bunch of deals they don't want to be in.
Right.
So you can come in, buy that debt at a discount. Same thing. You're buying long-term payment stream, somewhat long-term, depending on what the debt is, but a longer-term payment stream based on situations today, which are a depressed situation. If you can buy it at a discount and then roll that out, if they're getting 8% return on that money, and you're buying that debt at a 50% discount, well, now you're getting a 16% return, assuming they can pay and go, and then if they pay it off, well, guess what? You get full money back. And if you buy it at a discount, you've got the ability to kind of discount what they can pay it off at and do, motivate them to make a decision and move the direction you want.
Right. And ultimately, if you got to foreclose and then then all of a sudden you got a whole bunch of equity that you're sitting in on a deal. And so I applaud you, man. I think that's always, getting in with the banks, kind of seeing that's kind of been your strong suit. something I definitely want to pick your brain more on next time we're hanging out, having a couple of beers. But yeah, I totally agree. Things that I just thought about, you said notes, obviously minerals, land, cell towers, wind rights. I mean, just think of things that generate revenue, that generate income. And you could build a partnership around it with investors that you could utilize the tools, especially on the real estate side. So if you're in any of these masterminds and you're listening to these podcasts and stuff, the tools that are out there and available to get in front of your audience, whether that's triple line dollar, whether that's ringless voicemail, whether that's X-Blast, whatever that is, and utilize it in some of these other spaces that they're generating revenue. Mm-hmm. That you can then get really in front of your audiences. So just a few that I just kind of thought about just while we were chatting.
It was land, wind rights. What was that third one you hit on?
Like cell towers.
Cell towers, yeah.
Freaking cell towers, man. I mean, there's ways that you can go find, who different people. They get a royalty stream from that cell tower, and you can make them a monthly payment. I know a whole hedge fund that tried to do this. And they reached out to us to they wanted to get in the mental space. And I told them when we were told them about the text blasting, the ringless voice, it blew their mind. And this is a huge hedge fund that put millions of dollars together to buy cell towers. And they had no idea about a triple line dialer. Do you see? So opportunities are all over the place. They was like, holy cow, you mean we could? And so I was just, again, abundance mentality, man. You got to have that. These guys are real tight, close to the chest, New York private equity guys. And they were just like, wait, you're just going to tell us how you do everything? I'm like, yeah, all day long. I wish you the best of luck.
Yeah.
So I just, think outside the box. I'm not saying get out of real estate if that's what you're focusing on. I'm just saying there's opportunities all over the place that, you just need to be paying attention and just say what generates income, whatever that may be.
Yeah, that's the big takeaway, right? What generates income? Because when there's a flight to quality, right? People flock out of equities and they jump into maybe stronger suit equities that have dividends, right, for that income purpose. Bonds that pay a payment, guaranteed payment to some degree, and royalties, things of those natures. Income producing sales, and it's the same concept of pulling your money out of the stock market and going to bonds. Clearly,
correct. Correct.
So what generates income? That's what you got to be asking yourself. That's a big takeaway.
Equivalent in the real estate space is right now is not the ideal time to be buying raw land, right? Mm-hmm. You want to be buying really that grade A property or whatever that is that's generating good income that you can then, build a story around. Oil and gas in our world, what we talk about and what's happened with a lot of private equity backed oil and gas mineral companies, which I've been approached a few times to go with the private equity route. I refuse to go the private equity route because I don't like a Harvard grad that's 28 years old telling me what to do. Okay. Right. I just have a problem with that, but I'm not knocking it. I mean, I think, some guys have done really well, but right now some of those guys are in a pretty bad pinch because they've gotten out what we say in our business ahead of the drill bit. And they started leasing up the raw land in the real estate world. And now that development, that highway that was coming with new wells and new drills is not coming because price. It just stopped. That highway stopped. Yeah, so those guys are out ahead of the bit, right? Ahead of the drill bit, sitting there, and all of a sudden they're just they're scrambling. There's going to be opportunities to buy those back from those types of guys because they have to sell. So, God, I love it, man. There's opportunity everywhere. I mean, I think you have to be kind of a half glass full kind of mindset, but there's opportunity everywhere right now. Real estate, oil and gas, wherever. So you got to realize that, you're an originator. There's value with what you're bringing to the table to people that want to invest. And because they don't have access to that. The lawyer down the street, the doctor down the street, he doesn't have access. He didn't want to go out and do what you do. He just wants to invest and get a decent return. Okay. And decent can be anything from 6% to 12%. Okay. I've kind of spoiled my oil and gas royalty guys, but it is what it is. So, I think to have the conversation and then have that conversation with those types of folks, if you get in front of them, or even starting out with friends and family or people that that may have somebody that may be looking to invest, is just saying, what's your money doing right now? Well, we know in the stock market it's probably losing money. Okay. and just kind of pull back and just ask them a little bit about, tell me a little bit about your situation. And, oh yeah, well, I help people, my investors make about a cash on cash return. And if that's of any interest to you, I'd love to visit with you. If you want to talk to maybe some of your friends and maybe we put a partnership together, do it. What's the alternative? So, just some things that I always try to think people like, how do you raise money? How do you get to that point? And it literally started with one guy that believed in me, and guess what? Believed this story. We got going, and it started from there, and it went and it kept going. And now we're taking the track record that we built, and we're talking to now registered investment advisors, RIAs, that are managing a bunch of people's money. And then I get the RIA fired up, the registered investment advisor, the one guy that's the president, he's fired up. Then he goes and tells all his clients, and I too.
Oh, yeah.
And next thing I pay $1 million raise fund 3. Okay. So, and they believe, but I'm working with all those investors individually. Okay. I'm on the phone. As soon as oil dropped, I was on the phone talking to all of them. I'm like, guys, everything's cool. We're still going to be doing distributions on an individual basis, okay? So staying out in front of them, always communicating, at least once a month with your investors, at least once a month. I think our boys over at Memphis Invest, they are adamant about that. I think they're, the gold standard on kind of the real estate side and raising capital and doing all this stuff. So I give them kudos to that. So that's something to always keep in mind. Don't just raise the money and just go off and just do your thing. Always let them know, over communicate, let them understand what's going on, good or bad. Okay. Right. They just want to know what's happening.
100%. No, that's huge. That is absolutely huge. Wow. That was so much. That was so much in a small period of time. Man, what, is there anything else that we should touch on, or we might probably need to cut this up into 2 episodes because there's so much info. We've blown people's minds, but anything that we think we missed out here?
I think it's good. I mean, we talked a little about oil and gas, what goes on there, how that's kind of put together. We talked a little bit about capital raising. We talked about maybe where we see the markets. Again, I think the real value we're going to see in the real estate markets in the next 2 to 3 months. But I think you need to be thinking about adjusting price points on the real estate side. I think you need to be talking to your investors, talking to your VIP investors, and really understanding what do they need to actually close exactly in detail and provide that, anticipate what else they need. Right. And then what we're starting to do right now, Robert, is I've got my gals contacting as many agents as possible, which is something we didn't really do as much of in some of these areas where we're seeing cash transactions occur, or agents repping landlords, on rentals. I mean, you can just go, you don't have to have an MLS. You can just go on Zillow and just look up rentals in a particular zip code and just start calling those agents and just having a conversation. Hey, listen, I originate off market deals. Do you have any investors that you work with that would be interested in that? And so having that conversation with agents and working with, and there's agents out there that we're starting to do deals with that we didn't even think about before. So I think we covered quite a bit, man. It's been fun. I enjoyed this. Yeah,
it is a substantial amount of information. Hey, one thing I wanted to ask you about the oil and gas industry. I know obviously it's depressed now based on the market and COVID and all the craziness going on and uncertainty. But what about the kind of electric car industry, really starting to get legs? How do you see that impacting the oil and gas industry?
Freaking, I love it. 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 So so I think there was a governor in California that said something. They're like, it wasn't Schwarzenegger. It was like, Governor Brown, what's your favorite energy source? And he was like, electricity. And all of us in kind of the oil and gas business were like, we're like, well, where does electricity come from? So what powers the battery? So where that's coming from right now, especially right now, because prices are down and clean coal is just a joke, is natural gas. Natural gas is burned to create electricity. Electricity is utilized to power the batteries in the electric cars. Okay. So I'm all for it. If all of a sudden we go all electric, then guess what? Demand on natural gas goes up, price goes up. Okay. So I'm all for it. With what that could do for us as a nation. So I think coal was the power source of the past. Oil is the power source of today, and natural gas is the power source of the future. Okay. Now, people may say, "What about nuclear and wind and solar?" Forget it. They need, subsidies from the government in order to be able to work. And you need windmills all up and down, the plains of the middle of the United States in order to handle our thirst. So natural gas, we're the Saudi Arabia of natural gas. The United States is. We're sitting on so much. So I'm excited for what's going to be coming on that. Natural gas prices are fairly soft right now. So we're buying a bunch of natural gas assets. Interesting.
That's very, very, that's a big, big takeaway, because I didn't realize that natural gas burning was such a big power source for electricity. That's interesting.
It's the main one.
Wow. What about solar? How do you see solar? Obviously you're not a solar expert, but just, I'm sure you dig into it given that your connection to the oil and gas industry.
Yeah. It's definitely, a way of generating electricity. Again, if you look at just the thirst that we have in the United States for just getting things done and making things happen and going and getting a cheeseburger at McDonald's and all those things just right at our fingertips.
Yeah.
That demand is so high that solar is not going to, I think if you look at the overall pie chart, I think solar is just a very small little sliver of maybe 0.5%. But listen, man, I'm all in favor in all of that stuff. I think natural gas is going to have a presence for a long time, just because it's so cheap. Okay, so and we've got the infrastructure in place. The solar process, again, as you see with solar, a lot of subsidies and stuff like that need to occur where you get, rebates back from the government if you convert your house to solar. I think without all that stuff, I don't think solar has a chance, especially right now in today's ultra low price points with commodities. Where that starts to really work is when natural gas is like $4, $5 an MCF, not $1.75 where it is. Because it's just so cheap to go the natural gas route. But
right, yeah, can't compete.
Yeah, but it's a changing time. We've got to be flexible. We've got to be fluid. So maybe these mineral funds that I'm doing today aren't going to be around in the next 20, 30, 40 years. Who knows? But I think at least for the next 10, 15, 20 years, a whole lot of infrastructure would have to change. Sure.
Well, and yeah, you're fluid enough to figure it out and everything. I'm sure you're absolutely right on all that. But as there's adjustments, there's opportunity as well. And the folks that can adjust the best and pivot are the ones that really, really figure out how to capitalize on that. So you're there. All right. Well, thanks a lot. This has been just absolutely huge. There's so much. I've been trying to scribble down notes so that I can kind of do a recap here. And I'm going to have to go back and watch this and do a recap because it's not going to work.
Right. No, it's been great. I've really enjoyed it.
Absolutely.
Hanging out with you.
Yeah. Well, thank you so much, Jace. I greatly appreciate it. And we'll have to have a second episode here because I think there's going to be a lot of questions, a lot of great stuff that comes out of this.
Cool. Happy to answer. Happy to talk to anybody about what we're doing here at Rising Phoenix.
Hey, absolutely, man.